Let's be honest, the market is terrified right now. With Ethereum flirting with the $2,000 line, headlines are writing its obituary. Year to date, it's a bloodbath. Welcome to the generational wealth community, your pathway from knowledge to legacy. But while most people are hitting the panic button, a few powerful catalysts are quietly lining up. While fearful investors sell, some of the smartest players in finance are doing the exact opposite. They're accumulating. Why? They're not looking at today's price. They're looking at a specific roadmap for 2026 that could kick off the biggest alt season we've ever seen. In this video, we'll break down the exact catalysts that have analysts watching for Ethereum to blow past $5,000. And you can't blame people for being scared. Ethereum has been struggling to hold that $2,000 support level. The Crypto Fear and Greed Index is screaming extreme fear. With a score as low as 9, a level of panic indicating investors are extremely worried. To make it even worse, Ethereum is getting crushed by Bitcoin. The ETH-BTC ratio has been a total disaster, recently hitting multi-year lows, which tells you that capital is flocking to the relative safety of Bitcoin for now. Bearish chart analysts are calling for even more pain, with some targets pointing down to $1,760 or lower. It feels like every bit of news is negative, and the momentum is just relentlessly down. That's the brutal reality of the market today. But this is exactly the kind of environment that comes before the most explosive rallies. This widespread, gut-wrenching pessimism is precisely what the smart money waits for. They understand that the point of maximum financial opportunity is often found at the point of maximum pessimism. They aren't ignoring the fear, they're weaponizing it. So while everyone is distracted by the daily price swings, they're watching three key developments that the mainstream narrative is completely missing. These catalysts form a powerful, data-driven case for a historic comeback heading into 2026. The first catalyst: the unstoppable force of institutional money, which is now pouring in through spot Ethereum ETFs. While the current price is shaky, the big money is playing an entirely different game. We're seeing large financial players strategically building their long-term positions. Viewing Ethereum as a core asset for Wall Street, don't just listen to the panicked sentiment. Watch what the global financial giants are doing. Standard Chartered has stated that 2026 will be the year of Ethereum, targeting a price of $7,500 by the end of that year. Investment firm VanEck is even more bullish long-term, raising its 2030 price target for Ethereum to $22,000. Influenced by ETF news and scaling progress, these aren't small bets. They are positioning for a future where Ethereum is a core asset on Wall Street, and they're accumulating while everyone else is scared. The second catalyst is a fundamental upgrade to Ethereum's core engine. For years, the biggest knock on Ethereum has been that it's too slow and too expensive. That's about to change. The upcoming Pectra upgrade is set to be one of the most significant improvements to the network, combining two major updates to enhance scalability, user experience, and staking. This upgrade will introduce features that allow validators to stake larger amounts of ETH, up to 2,048 ETH from the current 32, which helps streamline the network and improve efficiency. It will also double the available space for Layer 2 rollups to post data, which directly helps lower transaction costs. These aren't just small tweaks. They are foundational changes designed to handle global scale demand, making the network faster and cheaper for everybody. This directly attacks the argument that Layer 2s are just draining Ethereum's value and makes the entire ecosystem more powerful. Finally, the third catalyst is a powerful 1-2 punch: regulatory clarity and historical market cycles. In the United States, the Financial Innovation and Technology for the 21st Century Act, or FIT21, has already passed the House of Representatives. Its passage into law would finally provide a clear rulebook for digital assets, dividing oversight between the SEC and CFTC, removing one of the biggest question marks that has kept conservative institutional money on the sidelines. This clarity sets the stage for the last piece of the puzzle: the great capital rotation. Market cycles have historically followed a predictable pattern. First, Bitcoin leads the charge and its price skyrockets. Then, once Bitcoin hits a peak and its dominance tops out, that profit starts rotating into Ethereum and other altcoins, looking for the next big wave. This rotation is what truly ignites an alt season. Analysts are watching for this exact pattern to play out in 2026. With a clear regulatory environment and a newly upgraded network acting as a huge magnet for all that rotating capital. So while the market is completely paralyzed by fear and fixated on a price dipping below $2,000, the roadmap for a historic recovery is being paved right now. The combination of institutional ETF demand, a massive network upgrade, long-awaited regulatory clarity, and the historical cycle of capital rotation creates a powerful, data-driven case for Ethereum's path to over $5,000. The gap between the current bearish mood and these fundamental catalysts is where the real opportunity is. But what do you think? Is the market right to be this fearful? Or are these catalysts enough to power Ethereum to $5,000 and beyond? Let me know your price target for 2026 in the comments below. Subscribe for daily recaps, drop a comment on your biggest takeaway, and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.